Did you know that just by mastering the CCI indicator, you can develop a super accurate trading strategy according to whatever trading style you want? And did you know that CCI is one of the indicators I rely on at TraderDNA when we analyze the market? I will show you a big secret about the CCI indicator in this video. Developed in 1980 by Donald Lambert, this indicator is one of the best oscillators that helps traders identify overbought or oversold market periods, like most indicators in this category. It's a linear oscillator that resembles RSI, but has its own unique features and advantages. So, what makes the CCI indicator special and what is the most effective way to use it? In this video, I will show you the 4 most popular methods used by pro traders in both the forex and stock markets. I will thoroughly examine these 4 secrets so that when you know all these strategies, you can develop a CCI trading strategy according to your personal needs and trading style. I'll start by discussing the origins of the greatness of the CCI indicator. And because of this, that's why we at TraderDNA are interested in the CCI indicator. And, of course, the next main thing is because of its high accuracy in producing trading signals. On the chart, the CCI indicator illustrates when the current price level significantly deviates from the moving average, determined by the trader's chosen period. The greater the deviation of the price in the short term from its average value, the more the oscillator line moves from the 0 point higher in an uptrend or lower in a downtrend. Typically, the indicator line oscillates between the plus 100 and minus 100 levels. Exiting this range signals that the asset is either overbought or oversold, constituting the fundamental signal of the commodity channel index. Unlike RSI or stochastic oscillator, CCI isn't confined to the plus 100 and minus 100 levels. The commodity channel index line may descend to the minus 200 and minus 300 levels, indicating an exceptionally robust downtrend and a deeply oversold market condition. Indicator formula. The CCI indicator is plotted according to the following formula. First, in this formula, typical price is the arithmetic mean of any candle minimum, maximum and close values. Second, SMA is a regular moving average line that is plotted by typical prices within a given period. Third, 0.015 is the experimentally determined constant. Fourth, standard deviation is a simple moving average plotted not by typical prices, but by value, typical price, minus SMA. That is, first you need to subtract a simple moving average value from the typical price value, and then average the obtained value by the SMA formula once again. Fifth, the moving average period is always the same. The CCI indicator setup. Commodity channel index is plotted in the same way as other indicators. There are 2 ways to plot the indicator. First, you have to select Insert Indicators in the trading platform main menu, and then find Commodity Channel Index in Oscillators. Second, click Indicators list icon with a green plus on the top of the toolbar. Select Oscillators Commodity Channel Index. The second version is a little faster and more convenient in practice. Indicators settings window will open after selecting it on the chart. The only parameter that can be changed is the period, but it affects all values in the indicator's formula. Indicator's sharpness depends on the period value as it is in other oscillators. The CCI line will move quickly from level to level when the period is small, and it will move smoothly, oscillating mostly around the 0 point when the period is large. Also, horizontal levels can be added or removed in Levels tab in the settings window. The best and most popular commodity channel index trading strategies. The most effective way to use the commodity channel index, like the majority of oscillators, is to use it as a filter. However, this indicator can also provide highly reliable signals to enter the market. First, overbought and oversold signal. Overbought and oversold are the basic oscillator signals relevant for the CCI as well. Orders are opened with these signals as follows. First, when the CCI indicator line crosses level plus 100 from below, then reverses and crosses it in the opposite direction, a sell order is opened. Second, when the indicator's line falls below level minus 100 and then crosses it in the opposite direction, a buy signal appears. It is worth noting that such signals appear quite often, and many of them turn out to be false in the end. It is better to add an additional indicator to the system or to increase the normal oscillation range in order to filter false signals. The overbought and oversold levels can be moved to plus 150 and minus 150, or plus 200 and minus 200 for this matter. Second, convergence and divergence indicators. Divergence is considered to be one of the strongest oscillator signals. Explicit divergences and convergences are formed much less often than just entering overbought and oversold zones, and therefore they produce a more reliable signal. Convergence and divergence can be identified by drawing lines through two or more local extrema on the graph, and the respective local indicator extrema. When the trend line on the price chart and the trend line on the indicator are moving in the opposite directions, there is high probability of trend changing. Convergence and divergence orders are opened the following way. First, when at the time of an uptrend the last local maximum is higher than the previous one, the line connecting them is directed upwards, and the last local indicator extremum is lower than the previous one, the line is directed downwards, a sell order is opened. Second, when at the time of a downtrend the last minimum is lower than the previous one, and the last minimum of the indicator is higher than the previous one, a buy order is opened. You can also exit orders with the commodity channel index signals when the line crosses the indicator in the opposite range. Each order must be protected with a stop loss set on a local extremum or at a key price level. Third, short-term CCI plus moving average strategy. Let us add one more indicator. A simple moving average with period 100 to the CCI system in order to improve signals quality and, accordingly, trading efficiency. It is better to use the CCI plus MA strategy for short-term trading, opening orders when prices retrace from MA. The moving average will be used as a support resistance line in this case. M15 is the optimal time frame for trading, but let us also add scalping at M5. Orders are opened the following way. First, when CCI leaves the oversold zone and the price line intersects the moving average chart from below, a buy order is opened. Second, when CCI crosses the plus 100 level from below, and the price crosses the moving average in the same direction, a sell order is opened. The easiest way to exit an order is with fixed stop losses and take profits. The main thing is to maintain the 3-to-1 profit-loss ratio. For example, planning to make 30 points profit with 10 points of affordable losses in one order. Fourth, integrated CCI-MACD trading strategy. In closing, let's examine the CCI strategy, which is more complex but suitable for both beginners and professional forex and stock traders. The strategy is highly powerful and reliable because it can be applied to scalping, intraday, and swing trading. Therefore, beginner traders can quickly grasp the strategy through clear entry-exit rules, while experienced traders can enhance the system for greater efficiency. All indicators in the system, namely CCI and MACD, are set with default settings. Buy orders are executed with this strategy under the following conditions. First, the MACD histogram is above level 0, indicating a bullish trend. Second, CCI exits the oversold zone and rises above the minus 100 level. Third, initiate a buy with a stop loss set below the nearest swing low. Conversely, a sell order is executed with the opposite conditions. First, the MACD histogram is below level 0, indicating a bearish trend. Second, CCI exits the overbought zone and falls below the plus 100 level. Third, initiate a sell with a stop loss set above the nearest swing high. This trading strategy yields optimal results for both forex and stock trading. These are the four primary trading strategies that form the foundation of numerous CCI trading approaches utilized by forex and stock traders globally. In my view, once you've followed and comprehended all the explanations provided in this video, you'll gain a thorough understanding of the CCI indicator. With this knowledge, I am confident that you can leverage the CCI indicator to enhance the precision of your individual trading strategy. Of course, you can adjust these settings on your trading platform, as this indicator is available on all trading platforms. Or if you want to have the exact settings as shown in this video, you can download them in the description. In this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so you don't have to worry about anything. Get the download link in the description. Here are additional examples of integrated CCI-MACD trading to help you fully grasp this remarkable strategy and maximize its potential. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or X to show your support. See you next time.